Spartans! What is your profession?
Howdy folks, Mark Hewitt here from Flipside Traders. And today we're going to talk about the continuation pullback setup. Yeah, we're not going to talk about income trades today because heading out for spring break this Friday, heading down to Moab, and as you know, most of our income trades have a Friday expiration. Since we're taking off a little early, I'm not going to be around. So definitely want to leave you something useful you can think about in your own trading as we go forward. So the first thing we need to do is kind of orientate yourself to the chart itself. As you can see here, that these candlesticks, they represent the overall price action. One thing that we kind of use to track that price action is what's known as exponential moving averages. And you can see here in the yellow is the 8 exponential moving average, the gray is the 21, and the pink is the 34. You can see that these right now, they're stacked, and since price is underneath, it's what we call a bearish moving average stack. And what's really interesting about that is that this stack of moving averages serves, in this case, since it's bearish and below, it serves as resistance to the price action during that trend. And when the trend changes, the moving averages restack this way with the 8 on top of the 21 on top of the 34. Now we have a bullish stack. And then we switch back down here and we have a bearish stack. So that's the first thing we need to understand. The next thing is when you look down here at this indicator. This is a momentum oscillator indicator. And what we're looking at is basically the change in price action. And we're doing that by taking a long moving average of a 21 periods. In this case, it's a 5-minute chart, so 21 5-minute periods versus that of a shorter time frame, in that case, 5-minute periods. So what happens is that the price is going to change, more quickly, in the shorter time frame. So you can see here we have this big dip, right? In the shorter moving average, you have 1, 2, 3, 4, 5, and you start moving. That value is going to increase because it has a shorter time period versus this longer time period is going to be a little more stable. So the difference in what momentum is calculated as is the difference between the short and the long. Obviously, as that distance gets bigger, momentum increases. And you can see that right here, we have decreasing momentum and as that value moves down. But at the same time, we could also have increasing momentum as it moves up this way as the price changes. You can see we have very fast price changing in 2 bars versus the past 21. That's going to create a big difference. What we have here in these histograms, all this is the difference between the short and the long. And so that just lets you know, hey, is it being constant? Are we still accelerating or are things actually changing? And that's very important as we talk about continuation pullback. So keep that in mind. There's one more thing we want to talk about, and that's a special candlestick pattern known as a doji. So I'm going to go ahead and expand this so we can take a look at it and talk about what's going on. So we're going to look right here, and this, let me go ahead and highlight this for you. We're going to look at this right here. This is what's known as a doji. And a doji, what happens is that the price action actually opens and closes in the same time period that leaves yourself with this very flat bar. And you can see that the market came up against this resistance. Remember, this is a bearish stack. And it said, wait, should I go above it, below it? Right? Bulls and the bears are fighting it out. They can't make a decision. So when they can't make a decision, in this case, that we know that if we go ahead and break this low, let's see if we can break this low right here, that serves as our entry. And at the same time, this will serve as our stop. So that candle is very indicative of what we're going to do. So let's go back and take a look at it in the broader context real quick. Let's get rid of these screen drawings and we'll go ahead and we'll pop back out. So what happens is we come through here, we have our bullish stack, right? Price drops down, the moving averages recalibrate, right? They stratify again. Now we have a bearish stack. Here's our doji. Our doji is at a point of indecision up against a resistance area. That resistance area, we can see as it comes down that we have decreasing momentum starting from back here. That decreasing momentum is saying, hey, it's confirming that we're in a bearish trend or trajectory. The key thing is, though, as we come down, we pull back in the stack, and the stack keeps its integrity. In addition to that, you can see that the histograms maintain their red color, right? It means we didn't cross. It means that we've maintained our velocity moving downward. This tells you it's okay to take the trade. So as I said before, we're going to go ahead and enter right here, and we're going to go ahead and put our stop here. So the question is, all right, now we're in the trade. We know where our stop is. How do we manage this trade? How far do we know that it's going to go down? Well, the great thing about the market is this thing called symmetry. So what we're going to do is we're going to project the previous downtrend, because this is a continuation, and we're going to project it from the highest point here, the doji. And you can see that here's the 100% projection of this same downward trend. So this is going to be 100% to this. And we use the Fibonacci extensions of the 127 and the 1618 to kind of give us an idea of where to take profits and where to scale out. So what we like to do is take 4 contracts, and we say, okay, we have an initial target is going to be 100% of symmetry. We trail our stop behind that, and we can see we just sliced right through it. We had no pushback at all, so we never got stopped out. So now we get to the 127. Hey, we move things back up to the trailing stop to the 100%. Hey, and we're still good. So now we take profit. We take profit. If we have 4 contracts, take a little profit at 100, a little bit at 127, a little bit at 1618, and you can leave a runner. And so basically on the average, we're probably going to, we got out here around the 127 extension. Now look at the power. We had the same thing. We had a little, let me get rid of this for you. We had a little news announcement from the Energy Information Administration, and it pumped the price action back up, but we came back down. We came back down, but again, we reasserted ourselves in a bearish stack. We had a doji. Based on that doji, we look at momentum. Momentum is downward. We know then that our entry point is going to be the low of the doji. We know that our stop is going to be the top of the doji. So now again, we have to figure out how to manage this trade. So again, we'll manage this trade since it's a continuation pullback. We'll look at the other downward trend, and we'll mark that from 100%. And look, here we come down through the 100, 127, through the 1618, and then we start to get fuzzy. But again, this is $700-800 in a contract in about 15-20 minutes. So it's a very powerful trade. Again, look at our momentum. It's downward. When we had the pullback, we did not break the integrity of the bearish stack of the moving averages, and we did not break the integrity of the histograms. They remained red, which said that we had continued downward velocity even though we were pulling back. The great thing about this is that this setup happens all the time. You don't have to be patient. Here we had 2 in one day, but let's take another look at Amazon. We had one there that we had a nice trade in today as well. So you can see Amazon, right? We had a little choppiness. We're fuzzy. We're going over. We pull up. We have a bullish stack. We come back down. Now we're in a bearish stack. Now we come up in the bearish stack, and the key thing is we have our doji. Our doji tells us there's indecision. It's up against resistance. Same thing, right? Our support our entry is the break of the doji. Our stop's above it. And now let's take a look at what our projection is. Let's use symmetry. We take 100% projection through here, and voila, 100%. So you know that you can run things pretty good to 100%. You set your stop at break even. you start taking some profit 100%, then your trailing stops are hit and you're out. Okay, folks, that's it. I hope this really helps. I hope you can use this continuation pullback. Remember, once again, the things that you're looking at. Let me get rid of this here for you so we can see. Right, we're looking for a stack of the moving averages. In this case, it was bearish. Price is below it. We get a doji support. Our momentum stays the same. It's downward trending. It never goes back to green. That tells us we can maintain velocity even on the pullback. And then we use our symmetry projections in order to determine how to manage the trade, where to set our stops, where to take profits. Okay, guys, have a great one. Hey, we'll talk to you next week. We're definitely off. I'm looking forward to get on the bike, leave the screens for a while, and catch a little sunshine and set the glow of this cathode ray tube. All right, catch you on the flip side, guys. Talk to you soon.